Imagine getting paid every year because of just owning a stock. Hmm? Today I'm going to break down top 5 dividend stocks in Kenyan stock market that investors use to build passive income. And before I start, someone might ask, what is a dividend stock? A dividend stock is a company that shares parts of its profits to its shareholders or its investors. And what that means is when you invest, you don't just wait for the share price to go up, but you also get paid for that. You get paid for investing in this company through what is called dividends. As always, this is Build Your Wealth Hub. If you are new here, karibu sana. We have a YouTube channel where we share free investment tips for anyone who is interested. You can check it out, and we do that weekly, so you may consider subscribing so that you can enjoy the content. And if you're a returning subscriber, thank you for that. So number 1 dividend stock among the top 5 is Safaricom PLC, and it is under the telecommunication sector. And the reason why Safaricom is among the dividend kings is because of consistent dividend payout. They have been consistent in paying their dividends and the strong profits that are driven by M-Pesa. So when Safaricom make profit from M-Pesa, that is what they use to pay the shareholders as dividends. And the more the profits, at least the shareholders are assured of getting dividends. And the reason why Safaricom PLC stands out as a dividend king is because it is one of the most reliable stocks in Kenya. Stock number 2 that every investor needs to consider, if you haven't, is KCB Group, and this is under the banking sector. The reason is because KCB Group has solid banking performance in its previous history, and they have been having regular dividend payouts. So investors like KCB Group because they have a steady income and they have a strong brand, which is really good if you are an investor because you feel secure. The third stock that is good for passive income in Kenya is Equity Stock Holdings, which is also under the banking sector. And the reason for this is because it has been growing across Africa, and more growth means more profits. And another reason is it continues paying dividends while expanding, which is a good thing for every investor who is after getting dividends. Equity is a powerful stock because you get both growth and income from the same stock or from the same company. And remember, all these companies are listed in the Nairobi Stock Exchange, and you can buy their shares with as little as 500 shillings. You can be a shareholder to the companies that we are mentioning today, and by being a shareholder, you earn dividends by holding them. Company number 4 is East African Breweries Limited, which has a very strong cash flow and dominates the alcohol market. The reason why this stock is attractive to many investors is because this business, EABL, makes money daily and shares it with its investors. Lastly, company number 5 that we are talking about today is Cooperative Bank of Kenya, which is also under the banking sector. You notice that a lot of companies in the banking sector have a promising growth, and that is why as an investor you shouldn't sleep on their shares. You need to consider acquiring them because it looks like there is a potential growth of most of the banks across Africa, and the more the expansion, the more the share price goes up, and even the more the profits, which leads to more dividends. For Cooperative Bank, you should consider it because it has stable earnings and it has also shown consistent dividends. And this cooperative stock is best for beginners who are looking for reliability. So if you are a beginner investor and you just got into the stock market and you're not sure which stock to start with, you can consider cooperative bank. And also if you're looking for a dividend stock that will be paying you as you hold it, and even as the prices go up, you can consider cooperative bank stock. One important lesson that I want to mention in this video is that dividends are not guaranteed. A company can stop paying or reduce its dividends if its profits go down. It's a matter of risk, because we all know that investing in the stock market is a risky affair, but the higher the risk, the higher the return also. So that should not discourage you, but you should be aware of that dividends are not always guaranteed. Someone might ask me, how much do you earn if you invest in a stock? So it all depends on different factors. For example, how many shares have you bought, the dividend per share, and how long you hold the share for. So the tip is, the more the shares you have, the more the amount you earn, because you're basically paid on basis of dividend per share. If you want to build passive income through stocks, dividend stocks are the best way to begin. Consider subscribing to Build Your Wealth Hub on YouTube and check out more videos which we have posted in the past for more simple Kenyan based investment tips. Also, check out my website at Build Your Wealth Hub. The link is in all my social media platforms. See what we have there, and if you might need a service or a product. Thank you for watching, and bye for today.